Welcome to the Create More Value podcast, sponsored by Fortuna Advisors, the boutique shareholder value improvement advisory firm. Create More Value is a series of conversations with senior executives, board members, investors, and other experts that have overcome challenges to create exceptional value for their companies. There are many ways to drive value, so we cover a wide range of topics. I am the host, Greg Milano, founder and CEO of Fortuna Advisors, and I hope you enjoy the conversation as much as I did. I would like to welcome Michael Levin. Thank you, Mike, for joining me on our Fortuna Advisors podcast, Create More Value.
Well, hey, Greg, thanks for letting me join you.
Mike is an investor, corporate executive, and management consultant with almost 30 years experience in investing, corporate finance, strategy, and risk management. He previously served on the board of directors of Comarco Inc. and AG&E Holdings Inc. Mike is an expert in all aspects of equity turnaround and as an activist investor. This includes practical business strategy, financial structuring, and SEC matters. As a management consultant and finance executive, he has worked on numerous turnaround cases in a range of industries. Throughout his business career, his efforts increased the value of equity investments many times. His consulting career includes leadership positions at Towers Perrin and Deloitte. He has also held finance executive positions at CNH and Nicor. So let's start, Mike, by having you explain how investors, in particular activist investors, think about companies, boards of directors, and executives.
Yeah, that's a great way to kind of kick this off. Activist investors are essentially value investors, deep value investors. We're looking for really undervalued companies with some decent assets, but real underperformance and some warts, some flaws, some things that need fixing. And we're going to analyze those real thoroughly. Look at the balance sheet, look at the operations, look at executive teams. But then there's an added element to how activist investors start viewing this, which I'll kind of loosely group under the broad category of corporate governance. For most value investors, we know there's some, one or more obstacles to turning it around, to getting that value. Mm-hmm. Could be sector problems. It could be just broad microeconomic or macroeconomic trends. But for activist investors, there's corporate governance obstacles as well. It could involve the board of directors. It could involve executive comp. It could involve corporate governance and domicile issues. There's a whole range of things, again, loosely grouped under corporate governance or kind of legal elements that also require attention. Mm-hmm. And we're going to look at both places. Activist investors, unlike other types of portfolio managers, really thoroughly read proxy statements, bylaws, exec comp plans, really dig into that kind of stuff to get a much more thorough understanding of what kind of obstacles those present to companies. So without that corporate governance perspective, those kind of companies just are deep value investors, and there's just dozens and hundreds of portfolio managers that look at deep value and try to get ahead of the value proposition. Activist investors also want to focus on those corporate governance elements. That's something that we can work on, where by focusing on some of those, changing some of those things, we kind of knock out those obstacles and kind of free up a company to get the value that we all know is embedded there. So.
Yeah, I mean, it makes a lot of sense. The thing about activists is they're not just trying to find a company that is undervalued. They're trying to be the catalyst for change, and these obstacles limit your ability to do that. So
right, and so we're gonna try to, and among that range of things I started alluding to, the board of directors is usually a priority. Mm-hmm. There's usually some sort of disconnect between the board and shareholders of the board and how they're managing the CEO or other senior executives, how they're allocating capital, what they're doing with cash. Mm-hmm. So the board inevitably, and that's what I look at as a priority, is how the board has oversaw the the company and its assets and trying to see if there's things there that are going to be a little easier for us to at least work on and potentially change. So, yeah.
Yeah. So I've worked with quite a few companies over the years that have activist investors in their stock, and
Sure.
I mean they're often a bit befuddled, right? Why me is the question I
Right.
always get, and so why? Give us some of the reasons why an activist picks a particular company to go after.
Right. It would involve some of the specifics related to what I just kind of mentioned. We could talk in lots of detail about some of the value
Hmm.
dimensions to it. Has to do with lots of cash, has to do with underutilized assets,
Hmm.
one or another underperforming business, or the whole thing. It could be past efforts seem to have failed to try to turn around a company. Maybe there was an effort to try to sell it before. There was maybe a strategic review that didn't go anywhere. So those are
Hmm.
all kind of the value parameters. Again, we could spend many podcasts trying to figure out what the best indicators of value are.
Hmm.
We're going to, in addition to that, look at a lot of detail. Like I said, talking about the board, a couple things we'll look at the board level would be the individual members of the board, how long they've been there, how comfortable they are, how active they are in managing the business,
Hmm.
in overseeing the CEOs, how they've looked at, because that's one of their main jobs.
Hmm.
There's sort of two jobs at a board. First is to make a lot of key decisions about asset allocation, deals, and so forth. But the second one is hiring and supervising CEO
Hmm.
and their and some of their direct reports. Though most good companies at the board will let the CEO kind of do that.
Hmm.
But then we'll look at things like, what kind of relationships exist between the individual directors and the CEO. Are things a little too cozy?
Hmm.
Have some of those directors been around so long that they're more aligned with what the CEO seems to want
Hmm.
rather than what shareholders want? So that's one of the key dimensions. Another offshoot of that really has to do with exec comp. And again, we don't really need to talk in detail today about some of the elements of exec comp, but we're going to look at some of the broad ways that comp is structured. Are the right incentives in place?
Hmm.
There's this old adage: it's not how much you pay, but how.
Hmm.
That's really, activist investors take that to heart.
Hmm.
We're going to look at exactly how are the CEO and the executive team rewarded. Are there really kind of basic old fashioned incentives in place related to growing revenues or something, or do we get into some much more sophisticated elements, not just share price or TSR, but how are they influencing cash flow? How are they
Hmm.
influencing use of capital? And
Hmm.
and in most cases, the that exact that activists look at, we're going to find way too basic comp. It's kind of table stakes at this point for the executive team to have a lot of equity, but it's
Hmm.
how that equity is awarded. What kind of goals are the board and the comp committee setting for that CEO, and
Hmm.
are there ways we can kind of improve on that? So
Hmm.
those are two or three things: kind of board composition, and then exec comp as well. Are some of the things that attract
Hmm.
the community of activist investors to one or another portfolio company.
That's good. For those interested in more on compensation, the episode with Steve O'Byrne a few episodes ago,
Mm,
Steve is one of the leading thinkers, I think, on how to align executives with companies. So I just wanted to
a great
plug
episode, by the way.
plug that. Thank you.
I listened to that one.
Yeah,
So
Steve's great.
yeah.
So once they pick a stock, what is, I mean, again, there's many options, but what is some of the key elements of their activist toolkit they use to try to affect change?
Well, I would describe it. Let me talk about the shape and look to the toolbox. Then we can go into some detail about it.
Hmm.
But most activists, if they're smart about it, don't go, all in all the way. It's kind of this process of gradually escalating pressure on a company, starting out by showing the company, we know what we're doing, we're credible. We own a decent, though it doesn't have to be huge, position in the company.
Mm-hmm.
And we're going to start maybe having some conversations, and those conversations ideally with the board,
Mm-hmm.
not necessarily with the CEO. And that's sometimes a problem that the board has, is that they've either been coached or their instinct is to say, "Oh, go talk to IR, go talk to the CEO, go
Mm-hmm.
talk to the CFO." And most activists think about the board as being their elected representatives. They're the ones who put it where, the activists are the one who put them in place and pay them. So we're
Mm-hmm.
going to want to talk to them as much or more as we're going to want to talk to the executive team. So,
Mm-hmm.
beginning some discreet, really confidential conversations. And if you were to go look at any kind of proxy statement from any good activist, the background of the solicitation is going to list a number of items that begin with, quiet, conversations. We built our position 3 years ago. We
Mm-hmm.
started, contacting management 2 years ago, and that didn't kind of go very many places.
Mm-hmm.
The other dimension to the toolkit then involves contact with other shareholders. I get a lot of inquiries just because of who I am from other activists. I not only am my own activist, but I also advise other activists about their portfolio companies and their situations. And frequently, I get this cry, this desperate complaint. Oh, I'm really upset at this company. I'm going to write a letter to the CEO. I'm going to write a letter to the board, and I'm going to tell them, a lot of time you're kind of wasting your time.
Mm-hmm.
What you really need to be doing is reaching out to other shareholders. Okay, so there's going to be this process where over time, kind of quietly, but deliberately, a good activist is exposing their thesis to other shareholders and saying, let's pressure test this. Let's see if we're
Mm-hmm.
right.
Mm-hmm.
I've had many caversations with other shareholders, and there's a script I kind of follow that
Mm-hmm.
says, how long you've been in the stock. What do you think of the management team? What do you think of the board? What kind of conversations have you had? What do you think of their capital allocation? What do you think of cash
Mm-hmm.
on the balance sheet? And have a lot of these conversations with other shareholders. And there's kind of almost a specific reason why that
Mm-hmm.
needs to happen. Most activists, unless you're, Carl Icahn or Elliot or something, aren't going to get the kind of changes that we know will add value to a company strictly on their own.
Mm-hmm.
Okay. We're going to need the support and the endorsement from other shareholders, even if you have, 5%, even if you're in a disclosure position or even over 10%. Okay. You're going to need other shareholders to, in the end, if it gets that far, and nobody really wants it to get that far, you're going to need them to say, yeah, I'm going to vote for you.
Mm-hmm.
Okay. Or as an intermediate step, after I've built that kind of goodwill and that credibility with other shareholders, and we're able to say not only our 4% make up a number is here, but there's another X percent, 20, 30, some percent of shareholders that want the kind of changes. And
Mm-hmm.
at some point in my discussions with a management team, I'm going to say to them, look, I know you think, I've got some ideas and so forth, but there's a lot of other shareholders that kind of agree with us.
Mm-hmm.
And if I were advising the company, I'd be telling them, okay, go call those other shareholders, see what they think. And those other
Mm-hmm.
shareholders, my goal is, my hope, my aspiration is that they're going to say, yeah,
Mm-hmm.
thanks for calling. Listen to Levin. He knows what he's doing. And he's and there's some stuff to pay attention here.
Mm-hmm.
So there's those kind of two dimensions. Not only is there some contact with the company, but there's a lot of contact with other shareholders. There's ways to do this discreetly. There's ways to do it legally that kind of build that support for those kind of changes at the company. So that
Mm-hmm.
those are kind of two aspects of the toolkit that
Mm-hmm.
executives should definitely be familiar with.
Yeah, that's good. Just one comment on something you said early on there.
Sure.
The vetting of the idea with the other investors can also give you information. Oh, there was one situation with one activist I spoke to. They had an idea that a company was undervalued, and they went to other shareholders, and one fairly astute asset manager told them he didn't think their thesis actually held water, and
Yeah.
it turned out that the products were more dated and disadvantaged versus the competition than what the activist had thought. And so what seemed like undervalued was really just poor performance, properly valued, or at least reasonably properly
Okay.
valued. And they wound up walking away before they built the position because they got this feedback. So I think the idea of reaching out and getting information from others in addition to trying to get support is an important part of the activist role. But just to go the other way now,
Yeah.
so some of what I saw with activists, let's say 15 or 20 years ago, was easy to criticize. I mean, there were lots of
Sure.
things that they did that, when I was inside working with the company, I could see that, it was a misguided thesis and so forth. I don't see that as often anymore. It's really evolved a lot. So, I mean, what do you think about how shareholder activism has evolved over the years?
Well, there's a couple of sort of key trends.
Hmm.
First, activism has gone from a iconoclastic and reckless kind of approach to something
Hmm.
that's a lot more accepted
Hmm.
among the whole investment community. So 10, 15, 20 years ago, if an activist wanted to do that second part of the toolkit, wanted to reach out to other shareholders, it was hard to even get a call returned
Hmm. Hmm.
from, a major institutional holder, from an indexer,
Hmm.
okay, somebody like that. Now, those other shareholders not only are willing to kind of talk about, talk with an activist, frequently they kind of welcome it.
Hmm.
Someone like the big three, BlackRock, State Street, Vanguard, they're not going to do this themselves. But there's portfolio managers walking around those places saying, "Wow, I got this real, crappy company. I just wish somebody would
Hmm.
be going after it." There was a trend a little while ago where some of those, it doesn't happen that much anymore, where some of those funds would try to reach out to an activist and say, I'll support you,
Hmm.
but I can't do it. But see what you can do here. Um,
Hmm.
so it's become a lot more accepted, sort of as an investment strategy.
Hmm.
And a company's going to get a lot less mileage than they used to out of just slinging a lot of mud at someone and
Hmm.
saying, yeah, they're just interested in feathering their own nest or in kind of wrecking the company now for short-term gain. Yeah, sure,
Hmm.
there's going to be cases like that. There's still activists out there that kind of make us all look a little bad
Hmm.
for that, but most of the time it's a pretty accepted portfolio strategy. So that's one of the first kind of trends that has happened. There's another interesting kind of trend, and this is a little more tactical, but
Hmm.
companies still have plenty of incentive, and there's still lots of mindset to see what can we do to kind of protect ourselves, to defend ourselves against this. It used to be that companies would kind of make it harder for activists to kind of win elections.
Hmm.
Okay,
Hmm.
win board elections. Okay, so they used to try to make the actual act in activism harder.
Hmm.
Okay, now it's there's a lot more of trying to make it harder for activists to even kind of get started. Okay, without getting into the technical details of it, there's this whole trend in the last few years about strengthening advance notice bylaws,
Hmm.
about trying to put in a lot of protective poison pills and so forth that just make it harder to just even for an activist to get off the ground.
Hmm.
Okay, and the reason that's candidly a little annoying is that what an activist is probably most interested in is trying to see whether our thesis will work. And if we
Hmm.
don't even have a chance to kind of test that out, if we're precluded from just nominating people because people are suing us in Delaware.
Mm-hmm. Mm-hmm.
Not only does that, get kind of costly and kind of, as I said, a little irritating, that's also going to probably upset some of the other bigger shareholders who are just
Mm-hmm.
going to, want to say, okay, maybe there is a legitimate debate here about, what businesses we should be in. Let's have that debate rather than trying to make the activists kind of go away at
Mm-hmm.
the outset. So that's kind of another trend. Again, without digging into a lot of the tactical
Mm-hmm.
details, which we could do, if we had a
Yeah.
lot more time and some legal debate. But those are kind of the sort of the two trends. It's a much more accepted
Mm-hmm.
way for portfolio managers to think about companies, and activists just kind of want their shot to be able to have an airing of their thesis rather than being stopped at the not being able to get to the starting line, to use a metaphor.
Yeah.
So yeah.
I mean, from my perspective, a couple of things to add to that. I thought many of the sort of demands of activists, well, in the past, again, 15, 20 years ago, were naive and generic.
Yeah,
And
absolutely.
now I see them being well thought out, well researched, and very specific to the company and its business model and its strategic situation. So I think there's been a big advancement there. But obviously, from an executive perspective, because obviously executives are one audience for this podcast, it's never nice when an activist shows up. Nobody likes to be told what to do.
No, right.
What are some of the other things you talked about? Some of the like legal things people can do to try to limit an activist coming after them, but thinking more like tactically and operationally and strategically, what are some of the things
Right.
executives can do to keep activists away?
Well, I always say that the very, very best IR strategy is a steadily rising share price. um, if you don't got that, and that's the reason we're there, is because that's not happening.
Mm-hmm.
I'm a big fan of very thoughtful, creative outreach, affirmative outreach to activists and shareholders. Okay, I've actually written about ways that boards can engage with shareholders, including the activists, much more creatively than they do. There's a whole school of thought about shareholder engagement and so forth, and we have investor
Mm-hmm.
days and so on. But I think there's a lot of room for companies to do even better.
Mm-hmm.
Okay, and I'm a big fan, as I started saying, of directors of companies, the folks that we elect and pay, creating and promoting really strong, trusting relationships with the shareholder base. Okay. I actually wrote
Mm-hmm.
something about it a while ago, and I borrowed from Ray Dalio and called it radical transparency. Okay. And again, I'm not talking about disclosing all sorts of, financial results and, risking, Reg FD violations and disclosing MNPD and so forth. I'm just talking about trying to have directors, like I said, build ongoing, strong, trusting relationships with key portfolio managers and also stewardship teams.
Mm-hmm.
So having directors, be in touch with the portfolio managers, including, the activists and so forth, and directors saying, asking questions like, how should we communicate with you? Here's my mobile phone number. If you want, to have a conversation with a division head or the CFO, call me. Okay. And so there's all sorts of kind of process improvements that are possible. So rather than having layers of people, IR, I'm not trying to disparage IR or
Mm-hmm.
general counsel and so forth, but instead of having them, intermediate all this and having all these meetings with, lots of scripted discussions and so forth, just to have these, have directors, being willing to sort of sit down, once a quarter, twice a year, however, long the parties seem to make sense to them,
Mm-hmm.
to have these kind of, constructive discussions where we can sort of hear what's going on in the boardroom, hear some of the tone about what's
Mm-hmm.
happening. Okay. And there's a real benefit. And there's, that could be a two-way conversation. So rather than the, directors just being a source of information. Let me answer your questions about, cash flow and so forth.
Mm-hmm.
Okay. Maybe have the directors ask some questions of portfolio managers. What do you think our risk profile should be?
Mm-hmm.
What should our balance sheet look like? What strategic direction should we be having? And you could talk to one or another shareholder, and they're going to have some views, and the director should be saying, you're only one out of 20 people that I'm talking to, so we may not necessarily do exactly what you say, but I want to know what you think. Okay. And there's a real interesting benefit to doing that, and doing that now before an activist starts to really get upset. Okay. So if you have a director that's reached out, that's sort of assigned to cultivate 3 or 4 direct investors, okay, if an activist decides to start to escalate things, and that company has already kind of laid that groundwork to build those trusting relationships, and the activist says, okay, I'm going to nominate some directors, okay, it's going to be much harder for those portfolio managers that have already, built that trusting relationship and been on the positive end of that outreach. It's going to be really much harder for those portfolio managers to start to try to vote against those directors. Once you kind of know them personally a little bit, that's really, I'm convinced that's going to make it harder for an activist to do that. So yeah. I could see this kind of various forms of, as I call it, this radical transparency kind of benefiting a board and the company.
Yeah.
So yeah.
Interesting. So when an activist shows up, the reaction of companies is often just like what would happen if a hostile takeover were suddenly announced. They lawyer up, they get the banks, they get everybody comes in. Is this the right approach? I mean, how do you think they should react when an activist shows up in the stock?
I'm going to betray a little bit of a bias here, that these are not like hostile takeovers. And there's still those hostile takeovers that happen. It happens plenty of times in a year here in the U.S. But lawyering up, hiring IR consultants, bringing an investment bank in and so forth is something that's probably an instinct. We got to make these people go away for using those resources. But those upset activists in a couple of ways. First, we think that it's a big waste of shareholder money. Okay, that we're just not seeing that's a valuable way to do that. So paying $250,000 retainer to a big white shoe law firm. Okay, bringing on a bank to start doing all this and start sending out all these news releases from an IR firm, that's just going to poison the water. Okay, rather than sort of taking some time to kind of hear what the activist has to say, and that could take months. Okay, canvassing other shareholders and so forth to sort of see what's going on. So we don't want to see that kind of money spent, and we also feel really that's not giving a fair hearing to some of the thesis that we have, that it's kind of blowing off shareholders or this shareholder in a way that really hasn't given us a chance to sort of say what we think.
Yeah.
So yeah, clearly there's some fiduciary duties that kind of set in the case of a hostile takeover or some other more specific tactic. But if this is just like, we have some ideas for the business, for the balance sheet, for the operations, and we just want to have some, possibly, honest conversations. Again, we're there because the company isn't performing so well. Okay. But, being kind of open to that and saying, is there a way that we can kind of hear you and sort of see if others agree with you without, again, lawyering up and sort of getting the, circling the wagons is probably going to lead to a more peaceful better outcome. Most activists when they're thinking about this, they're thinking about this in the end as some sort of negotiation. So we have an optimal outcome. We have something we'll settle for. We have a pie. So we're thinking about this fairly systematically. So we're kind of ready for that. But if a company escalates right away to like, okay, we're hiring everybody and we really don't like you. That's gonna, we're gonna escalate as well. Here's the one thing that the executive teams and the board needs to probably remember is that for an activist, the company in our portfolio is, a small or to middling slice of what we do.
Mm-hmm.
Okay. We don't care what people think of us as a general
Mm-hmm.
rule. We don't have, our reputation is to try to turn around companies. So
Mm-hmm.
there's a lot less at risk for us personally than there might be for a CEO.
Mm-hmm. Mm-hmm.
So we're willing to accept some of that. We don't love it, but we're
Mm-hmm.
willing to accept some of the criticism that executives, might not necessarily be as interested in.
Mm-hmm.
So viewing it that way probably might, make an executive or board, CEO a little more willing to sort of say, okay, let's see what these guys have in mind,
Mm-hmm.
and let's
Mm-hmm.
have a systematic, deliberate, it may take time discussion about this. Almost every situation I've been involved in where we've needed to ask it is because our first efforts to try to communicate were just kind of blown off.
Mm-hmm. Mm-hmm.
So yeah,
Yeah. Let me just before I get to my final question, let me just mention
sure, go
something
ahead.
to
Yeah,
the
yeah,
audience.
please.
So, for those who are interested in this area, I should have said this in the intro, but Michael publishes The Activist Investor is a website and a periodic email that he sends out, letting people know about all the activist situations that are going on and other information around like new proxy rules and things like that. It's a very informative email, so I'd encourage people to sign up to receive it. It's a good source of information for those that are
Right.
interested in this
You can
field.
you can find it at theactivistinvestor.com. One
Right.
word, no punctuation.
Okay, great. So my last question is really similar to a question I ask a lot of people. Are there any like funny or strange or special situations you could describe for us? Any activist situations that where there was kind of an extreme or unfortunate reaction of management, or just anything that's a little out of the
Well,
ordinary?
rather than talking about some of the specific ones I've been involved in, which I could, but they're kind of smaller cap and they're a little idiosyncratic. Let me talk about, because it illustrates quite well some of the intersection between the business and the governance stuff
Mm-hmm.
I mentioned a little while ago. I'll talk about everybody's favorite activist situation from this year,
Mm-hmm.
which is, you could probably guess, you see where I'm going with that, is
Disney.
Disney.
Mm-hmm.
Right. So Disney confronted a tough activist investor, Nelson Peltz, at Trian. Okay. And everybody knows how it ended. They ran a proxy contest. There was a lot of ego involved and so forth. And, Trian ended up, losing a battle, but winning a war. Everyone kind of knows that, Trian and the main other investor, a former Disney executive named Perlmutter, got, made a lot of money after
Mm-hmm.
Disney's, shares did appreciate. But, Disney was kind of a drifting kind of stock. Company, had a lot of really unbelievable success under Iger, but more recently it had been, not doing so hot. But the reason I bring that one up is because the very specific thesis, if you will, for Disney that Trian made very clear had to do with governance. Didn't have to do with what kind of media business it was in. It didn't have to do with how their streaming was doing. Didn't have to do with what kind of media background that Peltz and the former CFO did have some and so forth. But there was a very specific idea in mind based
Mm-hmm.
on what I could read, and I wasn't involved in this one at all. Though I know Nelson and so forth a little bit. Had to do with this. Had to do with a very interesting corporate governance element, which had to do with CEO Bob Iger, who again is one of the most uniquely successful and iconic media executives out there.
Mm-hmm.
Okay, but especially after he returned to the company,
Mm-hmm.
after the succession plan didn't go well and so forth, he essentially had a board that was going to do pretty much anything that he asked. They asked him back. They were kind of adrift in that way. Nelson Peltz saw something there, which was that there was nobody on the board who was going to really kind of question
Mm-hmm.
Bob Iger. There was no
Right.
one on the board there, at least publicly, from what we could tell, that was willing to, very candidly, to kind of stand up to him. Well,
Mm-hmm.
Nelson Peltz doesn't need the job, doesn't need the money. He's not trying to burnish his resume by being on the Disney board.
Mm-hmm.
Okay. And he was uniquely positioned to kind of question and push back on some of what CEO Bob Iger was trying to do, whether it had to do
Mm-hmm.
with succession, whether it had to do with a deal,
Mm-hmm.
or whatever.
Yeah.
Okay. And there was, the two board members that they were focusing on, in fact, didn't have a whole lot of board experience.
Mm-hmm.
And so the idea there was, he was trying to position himself as a voice, someone who could, in fact, push back, ask some questions that it seemed that other directors were not necessarily willing to ask. Again, and there's a lot of other ego. There's some other stuff going on there. I know all that. And having that kind of voice in a boardroom is something that a lot of shareholders in many other companies would love to see, and that's sometimes what activists are trying to do. Nelson Peltz also was willing to do it himself. Okay, rather than appointing someone to sort of be his spokesperson, he said, his most valuable resource is his time.
Mm-hmm.
Okay, and for him to be able to say to his investors, Trian has outside money, be able to say to his investors, I'm willing to take 200, 300 hours a year. And it's a prestigious board, of course, it would be, fun. But I'm willing to take that much time out of my schedule to work on this one portfolio company.
Mm-hmm.
Says something. So that would, I think, be an example that kind of illustrates a lot of the stuff that we were talking about.
Mm-hmm.
The interaction of very nuanced governance issues interacting with some of the value drivers in a company. So that's one thing that I think about a bunch, written about a little bit, and continuing to look at. So yeah,
that's a good example. And just another note on Nelson Peltz. I remember when he went into Heinz years ago, he was trying to get them to reduce trade promotion and instead spend more money on advertising, which is a much longer term investment than what management was doing, which is kind of interesting. And the other interesting thing about that case was when he finally sold his investment, they convinced him to stay on the board for a while. So management actually liked having him there. So he has quite a reputation.
That was part of
example.
his pitch at Disney was, hey, I got all sorts of other boards where I started being an activist, and they ended up liking me.
Yeah, it's good.
You just gotta get over it. But yeah.
Well, thank you very much. We've been speaking with Mike Levin. Thank you, Mike, so much for joining us for this important conversation.
You are quite welcome. I'm glad this was interesting and helpful.
You have been listening to Create More Value, sponsored by Fortuna Advisors, and I am your host, Greg Milano, founder and CEO of Fortuna Advisors. I hope you have enjoyed this episode. Fortuna Advisors helps companies with strategy, capital deployment, business management, corporate culture, and incentive compensation, all aimed at driving top quartile total shareholder return and the equivalent for private companies. To learn more, contact us at info@fortuna-advisors.com.